Stephen, emerging market returns have been strong year to date. What's your outlook for the rest of 2025?
I think for this year, what we're seeing is global asset allocators are increasingly shifting their capital outside of the US, and the emerging markets are increasingly becoming a destination. So we're quite excited about emerging markets as an asset class. We think there's a number of really interesting themes at play. And frankly, investors have sort of widely ignored them for quite a while. So we're quite excited about the setup for emerging markets here.
And what are some of those themes briefly?
So some of the themes that I really focus on in some of my markets are more towards the rise of the formal retail away from informality. So some of those would be, if you think of a country like Vietnam, where I was just traveling, many people still use a lot of the markets in order to do a lot of their shopping. And so in fact, modern retail has grown at 40% a year for the past 5 years in Vietnam. The same is true of modern pharmacy chains. They've grown at 60% a year. So informal to formal retail is one of the key themes we're really focused on.
And what about emerging markets versus frontier markets? Or are frontier markets part of emerging markets? How do you distinguish between the two?
Yeah, so I spend a lot of my time focused on what we term the next generation emerging markets. What we're really trying to do is go back to the original promise of investing in emerging markets. So to give you one statistic, of the 15 largest countries in the world by population, more than half of them are these sort of overlooked but large, what we call next generation emerging markets. So countries such as Vietnam, Indonesia, Philippines, Pakistan, Bangladesh, Egypt, and Nigeria. So I'm really focused on these large but overlooked markets, which are uncorrelated, have great demographics, and are really a nice setup in terms of historically low valuations.
And are all of a sudden in the news because of tariffs. So how are you factoring in the tariffs towards your country and your stock pick?
Yeah, I think the interesting thing about a lot of the countries that I follow is that they're not really in the tariff trade sort of crosshairs, maybe outside of Vietnam. So countries such as Bangladesh, Nigeria, they're not really, for better or for worse, they haven't really moved up the global manufacturing chain. They have these more idiosyncratic developments, and a lot of them are undergoing really strong structural reform. So we think we're quite excited about these countries in this moment. They also rely on domestic demand to generate their economic growth, so they're not as reliant on exports. And so I think they'll be a bit more insulated.
Can you talk about how you pick companies for your portfolios? Do you go to the country first and then choose the company, or do you choose the company regardless of the country?
We have a pretty strong track record of having really big focus on top-down macroeconomics. So we definitely pay a lot of attention to focusing on the macroeconomic environment, growth, inflation, and some of the more structural dynamics. And then from there, we will travel to a country, meet with a number of policymakers, meet with a number of corporations, and then do our stock selection from there. So typically, it's about 50-50 top-down, bottom-up.
And with all the focus on currencies of late, everyone's watching the dollar. How do you factor this into your asset picking?
Yeah, currency is probably the key macro variable to focus on. It accounts for about 1/3 of all sort of returns in our markets, so it is crucial for us. I think historically we're really focused on currencies that are much more stable over time, so much more likely to allocate capital to, say, a Vietnam relative to, say, a Nigeria, all else equal. But there are times when currencies have moved so much, in other words, like 50 to 90%, as we've seen in some of these next-gen emerging markets, that the value really becomes apparent and we actually start to do our due diligence at the company level.
And then finally, where are the premiums in emerging market companies right now? So for a long time, because if it was geopolitical worries or currency worries, revolution worries, there'd be a bigger premium built into emerging market companies and countries. Where is it right now?
I think right now, like in terms of the premium, you're seeing that investors are placing a premium on countries such as India, where they do rely on domestic demand for a lot of their economic growth. But what I would say, though, too, is that there's a number of countries which are trading at single-digit PE multiples, countries such as Pakistan or Nigeria or Egypt. And they are home to these really strong secular forces. So while global investors are paying attention really to AI or geopolitics, these markets offer a different opportunity. They are idiosyncratic in nature. They are underpinned by secular forces such as demographics and income growth. And you can find really interesting themes such as digitization, healthcare, and even the rise of the consumer.
And they're cheap.
They're cheap. We're talking, again, PEs of 5 or 6 times earnings. And so again, I think a lot of that is due to the lack of liquidity. But I always like to say in exchange for that lack of liquidity, you get a number of really interesting things. You get low valuations, you get low correlations, and eventually liquidity scales over time. I always like to point out India in the early 2000s traded $140 million a day. It's now 12 billion. So it pays to be early in some of these low liquidity environments if there are strong forces behind them going forward.
All right. Well, thanks a lot for coming on and talking about it.
Thank you.